As of today, Bitcoin was just $150 from reaching a new all-time high of 100,000. If you aren't already holding Bitcoin as a part of your regular investment portfolio, you need to watch this video before deciding to jump in. If you buy into the hype without keeping the following steps in mind, you may regret it. Let's get into it. Bitcoin has been making headlines recently, not just for its usual volatility, but because it's been attracting massive inflows. I'm talking over $1 billion in just 2 days. And these inflows aren't just into Bitcoin itself, but into Bitcoin-related ETFs. So, what's going on, and what does this mean for you as an investor? To understand the recent surge in Bitcoin, we need to take a look at the broader picture. Over the past months, and particularly the past week, Bitcoin has seen significant upward movement, driven by major institutional investors jumping into Bitcoin-related ETFs. A Bitcoin ETF, or exchange-traded fund, essentially allows institutional and retail investors to gain exposure to Bitcoin without actually having to buy and store the digital assets themselves. Instead, the ETF holds Bitcoin on behalf of its investors, and it trades on traditional stock exchanges, much like any other stock or ETF. The allure of Bitcoin ETFs lies in the convenience, liquidity, and the fact that investors can avoid the complexities of owning and safeguarding Bitcoin directly, like setting up a wallet and worrying about securing your seed phrase. The surge in Bitcoin ETF inflows signals that institutional investors, those big money players, are increasingly seeing Bitcoin as a serious investment asset. And that's giving more retail investors the green light to jump in as well. Here's where things can get dangerous for individual investors. With all this excitement around Bitcoin and the rapid influx of capital into ETFs, it's easy to get caught up in the hype. This leads to FOMO, the fear of missing out. This is a psychological trap where you rush into buying an asset because you're afraid of missing the potential capital appreciation. We see it all the time. Headlines like Bitcoin hits new highs, Bitcoin ETF inflows reach $1 billion, and suddenly everyone feels like they're falling behind if they're not investing right this moment. But here's the truth. Chasing after any asset, especially one as volatile as Bitcoin, can lead to serious mistakes. It's easy to get caught up in the moment, but the reality is that these massive inflows and growth are often accompanied by major pullbacks. One of the biggest dangers of FOMO is the temptation to put all of your money into a single asset. This is where diversification comes in. Instead of investing heavily in Bitcoin or any one asset class, a diversified portfolio spreads risk across different investments: stocks, bonds, real estate, and once your fundamentals are met, even digital assets like Bitcoin. A diversified portfolio can help cushion the blow if one asset takes a hit. For example, if Bitcoin suddenly drops in value, your other investments might still be doing well, helping to offset those losses. By focusing too heavily on one asset, you're essentially betting that it will keep going up, and that can lead to some pretty painful losses if the market turns against you. So, how can you protect yourself from FOMO and make smarter investment decisions? Here are a few tips. First, set clear financial goals. What are you investing for? Retirement? A down payment on a house? Knowing your goals will help you make investment decisions that align with your long-term plans, rather than reacting to short-term market moves. Second, diversify your portfolio. Don't put all your money in one place. Spread it out across different asset classes so you can reduce the impact of any one investment underperforming. Third, make sure you understand the risks of any investment. Bitcoin might seem like a great opportunity right now, but it's a highly speculative asset. Before jumping in, ask yourself, do I understand how this blockchain works? Am I willing to tolerate the extreme volatility? Do I have the risk capacity to handle the Bitcoin roller coaster? And finally, stay calm and avoid emotional decisions. Don't let the noise in the market push you into making bad moves. A solid investment strategy is built on patience and discipline, not on reacting to every market headline. If you've been a diamond-handed holder of Bitcoin for the long term and are saving for a specific purchase, perhaps consider using this time to realize some of your gains and rebalance your assets. At the end of the day, Bitcoin and other digital assets are exciting and innovative, but they should be a part of a well thought out investment strategy, not your entire retirement plan.
There's always money in the banana stand.
Remember, it's okay to be cautious, and you should only invest what you can survive losing. If you're holding BTC, be sure to subscribe. And don't forget to share this video with anyone who might be considering jumping onto the crypto bandwagon. Watch this video next to learn how to use an emergency fund to weather market volatility.